What's up, people? Welcome to this episode of the Buy the Hood podcast or webcast because I don't know how you're consuming this content. I'm your host as always. My name is Jimmy. And as we start off every show, that's with gratitude. Just want to say thank you to anyone and everyone who supports our mission and our work. But special shout out to the students from Buy the Hood University as well as the youth from the Buy the Hood ownership camp. I got my partner in crime, Core, with me as always. Core, what's up, good brother?
What's really good, man? Every day above ground's a good day, so let's go get it.
Yes, sir. And everyone knows that our platform is designed to highlight brothers and sisters who are putting out positive energy, doing great work in the community. We got a returning guest, man. We got our brother on, man. This is our brother. You know, we actually one of our business partners from our MDC strategy group. And for those who don't know what the MDC strategy is, you can go to mdcstrategy.com. That is our private membership group where we talk about all things in terms of Black wealth and building wealth. But we got our partner in crime on. You know, we got to have Spoon back in the building. Spoon, what's up, good brother?
What's going on, fellas? How y'all been?
Oh, man. Yeah, man. We want to get a quick talk with you, man. One of the things we've been doing over the last several weeks is bringing our folks on to talk about what's going on in these markets, man, as people are navigating the investment world. They're looking at their 401k accounts going crazy, IRAs going down crazy, and we want to talk to the folks that are in these markets on a daily basis to see what their perspective is, and also to help our folks get prepared for what's coming up, right? That's one of the bigger conversations. 2023 is upon us, man. So first and foremost, how are you seeing these markets right now, Spoon?
I'm looking at all of this as opportunity. I think we got comfortable with being at the highs. And now that we're seeing this volatility, everybody's starting to panic and want to get out the markets. But this is the worst time to do that, is to get out the markets.
Yeah.
I feel bad for the people that had to ride this wave down. But, the foresight to see it with the interest rates and things of that nature going up, you kind of could see the market will see volatility. And that's where we're at with it. But to get out right now, I think is a mistake.
Yeah. And one of the things I want to preface this conversation with, for those that don't know, and Spoon has been on the platform before and told his whole story. But, I've known Spoon damn near his whole life, right? Spoon has been trading for a long time at this point. So Spoon isn't one of these guys who just got into the market over the last couple of years when it became popular to do so. Like me and Spoon have had trading talk conversations over a decade ago where he was already, putting his foot in the water, probably even longer than that. Like, how long have you been at it, though, Spoon? Investing and trading.
About 18 years, 19.
Yeah. Spoon is an OG. I know he looks young over there, but he's an OG, man.
Yeah.
He's been putting in work a long time. And I preface that to say that, and I think it's important to bring that up, is because you've seen some dark days, right? You've seen some dark days in the market. Because a lot of people have just gotten into trading and investing maybe over the last 3 to 5 years, and they haven't seen some of the things that you've seen. So with your experience, how has that prepared you for what's going on now?
I think biggest lesson I learned was going through these phases and going through these crashes. I was quick to jump out or just wasn't active enough with trading.
Mm-hmm.
I would just hold off or put my accounts on pause.
Gotcha.
So then I would wait to get back in the market. But that was a huge mistake because I missed a big portion of the accumulation phase. And we're going into accumulation phase, whereas though I know everybody know me for option trading, but when I say accumulation phase, I mean buying hard shares of your favorite companies.
Mm-hmm.
And when I say your favorite companies, you really should be looking at the top companies in the world to be buying, like those premium companies like Apple, your Microsofts, your Googles of the world. Whereas though the fundamentals of those companies just make sense to buy.
Mm-hmm.
Like if you got a company with the fundamentals, like even that question, I wouldn't even touch them because you're going to have better opportunities to put your money in these premium companies that you're not going to have in the next 4 to 5 years. Because at the end of the day, the companies that got money and they got money on the books, things of that nature, they're going to still prosper.
Yeah,
the whole economy is going to slow down. These companies are going to slow down, but at the end of the day, they're going to come out as winners. And we've seen that in the financial crisis. I know y'all can testify to this, whereas the smaller banks, the banks that had and the brokerages that had a lot of debt that went out of business. You seen other banks, the bigger banks that had strong balance sheets, come in and buy them up for pennies on the dollars.
That's the old adage, right? Big
Yeah.
bank, big little bank.
Yep. So when that happened, you know, a lot of us panicked taking our money out of the market, but we should have been looking for opportunities to say, hey, jump in, because this is where the wealth is built at. This is where the real money is built at.
And I'm glad you said that about the hard shares. And I do want to add this to the conversation. Anything we say on this episode is for educational and informational purposes only. This is, this is not investment advice. We are not your financial advisors. I do want to say that because we're probably going to talk about specific companies. And what you said was interesting about those stronger companies that we know are going to be there, right? And one of the things that about being in this space of someone who's trading and investing on a daily basis is it's always a constant learning thing, right? So you never know it all. I don't care how long you've been doing it. It could be, it could be 18 years. It could be 38 years. I've been in this game a long time, but I'm still learning things about myself in terms of like investing and trading. One of the things I've come to grips with recently, though, Core, is, and I've said this in the past, right, that cash is a position, right? But I still struggle with just stacking cash in my brokerage, because when you become an investor, you want to put your money to work for you all the time, right? I have a hard time sitting on cash, yo. I just really do. And
because the opportunities just get better and better because everything is starting to, people and things are starting to fall apart. And so it's hard to sit on cash when the opportunities just keep getting better.
It is, but I got to work on that, though. I definitely got to work on that, though. I got to have the discipline, because what will happen is, the Spoon just said, one of these amazing companies will go on like a complete sale, and I'm still able to acquire some, but not as much as I would like, because I'm always in motion, right? So that's something that I'm working on now personally. Spoon, how do you do when it comes to that? Like just being able to sit on cash to make moves?
Well, the biggest thing with me is my discipline comes from dollar cost averaging in.
Yeah.
So when the fundamentals meet the price point, I'm not just dumping, 20, 30,000 in at that mark. I might be dollar cost averaging in 1,000, 2,000 at a time. But as the price is dropping on some of these things. So, I'm lowering my buying point. So that helps keep me disciplined, a lot of times. Just that thesis of dollar cost averaging in when we're at these lows and at these premium prices.
Yeah.
So that helps out a lot with that.
Yeah. One of the things that I recognize is that, and again, this is me personally, right? Everybody has to do what works for them. I have to remove my money from the cash portion of my brokerage account in order to sit on cash, right? I literally got to separate it and go put it in a whole other account. And that's something that I realized, like, that's the only way I can like stack cash, right? I can't have it right there, because if it is, I'm a bust a move. Like, I can't help it. Like, I'm just an investor. I'm going to always try to bust moves, right? But so with 2023 coming up, though, Spoon, how do you see like the market going into this next year?
I still think we're going to be at lows. I still think we're not at the bottom of this cycle. I still think the Fed is not done raising rates. And long as the rates are being raised, the market is going to go lower. But once they say, hey, we're going to slow down on raising rates, I mean, not necessarily bring the rates back down, but just to say, hey, we're going to slow down and balance this out. The market is going to continue to go down. But we all know, like, the market, especially pricing in the market, is kind of foreshadowing. They always looking like a year or two out. So my thing is, you don't want to be late to the party, because by the time they say, hey, we're in a recession, or hey, we're in a crisis, pretty much by the time you see it on the news, we're going to be coming up out of it. You're going to be missing that opportunity to accumulate. So that's why I think it's important to get the thesis or the concept of dollar cost averaging in as we go down.
Gotcha.
So a lot of our good companies are already 20, 30% off the highs. So that's 20, 30%. That's a 20, 30% sell on some of your favorite companies. So, if you was loving Tesla at 500, 600, you got to be loving it at 200 or below, if you was loving that company at those price points, we're looking at a 50% discount on a company that you allegedly loved at $500 when it was trading there. So you had to look at it. you know, you just got to know, like, you know, if you love it, you know, and that's to people that would say they love it and they did their homework and they knew the fundamentals of the company.
Man, listen, one of our partners loved Tesla to death.
Yeah.
I was like, I mean, and he does all the research, so I can't, you know, so I'm not gonna fight with him about it, but you know, I wouldn't take. Yeah, I know he does the research. Yeah. I just don't. My research doesn't come up with the same results that his did.
Yeah, so there's nothing wrong with loving it. I don't have a problem with you loving that company or loving or
any company.
But what I'm saying, you know, my point is, if you loving it at $500 and $600, you gotta still be loving it at $200.
Yeah, absolutely.
Not even more.
Yeah, no, absolutely. Because the thing is, like, unless something fundamentally changed with the company, right? If nothing fundamentally changed with the company, you got to look at it as it being on sale, right?
No,
and Corey, that's a great point, though, right? Because you know, you're talking about. I know which one of our partners you're talking about, and you absolutely hate Tesla. He loves it, but I appreciate both of you guys' perspective, and that's a great thing about investing too, right? Is you don't have to be in everything. And you don't have to love everything. And you don't have, it's okay to miss bread, right? And that's one of the things you learn from experience too. When you see everybody like, you know, making money, everything ain't for everybody, man, right? You know what I mean? Spoon, I do have to ask you this, right? So in our MDC strategy, and what I want to do is I'll put that at the bottom of the screen for the people watching the video that, you know, if you're watching the video, listen to audio, you know, go watch the video too. And make sure you subscribe to the YouTube channel or the Facebook page, but it's mdcstrategy.com. I'll put it at the bottom. So in our MDC strategy private group, you teach classes about a lot of things options-based, right? You taught classes on the Greeks. One of your most recent classes is on covered calls. So you're known for someone who uses different strategies, not just open calls or puts, covered calls, spreads, and things of that nature. Are you doing more of that these days or less of that? Like what are some of the strategies you're currently running in the market to generate income?
I'm doing more cover calls than anything as far as a lot of my strategies.
Okay.
What I am waiting for, you know, I don't want to put it out there like that, but I don't think we're at the bottom. So I'm waiting to accumulate some bigger positions when I believe we're at the bottom of the market. Yeah. And once we get there, I will accumulate more bigger positions. And as y'all all know, I will employ the cover call position from there. But that's I think the cover call strategy is one of the easiest strategies to learn. And it's one of the easiest ways to create passive income while you're in some of these positions and waiting, you know, for the bounce back. So it helps out tremendously, especially if you accumulate hard shares also, not just on the option side.
I was sitting talking to someone and they showed me their account and they had a bunch of Google. They were averaging like $600 a week just running cover calls on Google. Now, the way they were doing it like 2 weeks, 3 weeks out, but they had a couple hundred shares. And I was sitting there like, damn, that's like, you know, literally when you think about it in the context of rental property and they're printing off $600 a week just on those cover calls. I'm like, man, that's crazy. That's like a second job for some folks. You know what I mean? So that's a very powerful strategy. And by the way, Spoon, I don't know why I didn't even tell you this, right? So, you know, I've been running cover calls on DraftKings for like a year and a half now. Someone finally got my shares, man. They snatched them up off me.
Well, you can't say it was a loss, you know.
No, it wasn't at all. It wasn't at all. But the thing is, usually what I'll do is I'll run the opposite side and then, like, you know, run the wheel. I didn't do that this time though, because I'm trying to build a bigger position in the company that actually, you know, I'll be transparent. Again, it's not investment advice. I'm trying to build a bigger position in Square to use those to run cover calls because the premiums are better.
Yeah.
But anyway, with that being said, so the cover call is a big one that you're running now. Are you still doing spreads at all right now?
Not so many, not so much spreads because, like I said, I still do my trading with the MDC. That's basically my short-term trades when I'm trading within the MDC and with you guys. Outside of that, I'm strictly focused on accumulating more shares of these companies that I really like. And
so I'm picking up your strategy right now, Carl. I know you're picking up what he's saying, right? He's buying hard shares as the market goes down. He's DCing in the hard shares with the goal of accumulating enough. So then when everything turns around, he's going to be running a cover calls like a maniac. Yep. That's what it sounds like.
Yeah. So, and I want all number one companies. Like I don't want the second and third company in a space. So I'm transparent. transparent mostly with you guys. So within the tech space, it's going to be Apple, Microsoft, Google, and NVIDIA. Those are the only companies I'm interested in the tech space. In the industrial space, I always talk about this company.
3M.
3M, always.
Yeah, I knew it. That's his baby.
Yep, that's my baby. On top of the dividend that they pay, I love 3M as a company. Now, as far as they books, it's not as sharp, but they're not a tech company, so I don't expect them to be as sharp. Another big sector that I really, really like is the bonds. The bonds are at the lows that we haven't seen bonds at lows like this in years. And listen, if the bonds go to zero, we got more things to worry about than my money, your money.
This is true.
Anything. Like, we're talking about the bond market. So the bonds are at the low. So I'm looking at accumulating positions in TLT. You know, that's
okay. We get ready to ask you that, because you might be the first person in like 4 years of us doing this to actually say anything positive about a bond. So you're the specific one you're talking about is TLT, right?
Yep.
TLT. Okay. So you got any thoughts on that, good brother?
I mean, I don't disagree. TLT's not at the lows, because it was at the lows months ago. That joint been actually picking up steam as the Fed been raising the rates. It's actually been picking up steam. So, I don't know. I mean, I know that it's a good position to have. I just don't know if we at the bottom of that joint. I think we still got space to go down, because once he stopped raising the rates, I think that's going to slow down a little bit.
What kind of dividend does TLT pay?
I don't know. I'm not sure.
If they pay anything, it's going to be light. I'm not picking it up for the dividend.
Okay.
I think the last time I checked it, it's like 2% or maybe.
So it's not much. Okay.
Yeah, it's not much. So
that's a hedging position, though.
Yeah.
So the bonds are back down. When I say the lows, maybe over the last 5 years lows, that's where they at. Like trading.
Yeah.
Anytime TLT goes under $100, you talking about like 5-year lows. I think last time I checked it, we was at between $97 and $95, somewhere around about. So I think I bought my last few shares at $100.
I'm looking now; it's about $95 right now.
Yeah, so I got another tranche around there also. So, but yeah, as far as the bonds, you haven't seen the bonds this lows in years. So that's another market I'm interested in as far as the bond market.
That's interesting, though. That's interesting overall. Like to hear you talk glowingly about bonds, because folks be hating on bonds, but you know, it shows how you're building an overall portfolio, right? That kind of protects yourself with everything going on. All right, man. So Corey, you got any questions for the brother while you got him here, man?
Yeah. So, using your strategy, do you take the money that you make from your cover calls and then reinvest it into more of the hard shares, or do you keep it as cash to hold for a different position? How do you use the money that you make from the
Good question.
Right now, I'm using the cover call, the capital that I'm bringing in from there, basically looking to redeploy it into hard shares.
Okay.
So, and that's always dependent on price points. Like I'm always, like I said, I'm looking to average down.
Okay.
So that's kind of how I've been doing it, Corey.
Okay.
And, go ahead, Corey. No, I was building on that question. Is your long-term goal to just like strictly just be a cover call, like just to run cover calls?
I'm not gonna say it was a goal, but it's working. So I'm not going to change, right?
All right, I got you. You're doing what the market. I got you.
Yeah. So I never imagined, when I first got in and really learning like complicated strategies, it was really like almost wanting to learn everything. Yeah. But then I dumbed it down where it's like, yo, what's really, really working? So, and one of the positions that's really working and has been consistently working has been the cover call positions. And that's what I really, really like doing. And it's the way, as you know, the way I teach it and the way I do it is almost like you don't have to watch it half of the time.
Yeah.
So that to me is a stress reliever also.
And for those that aren't in the MDC, like first of all, get in the MDC because it's definitely worth the value. But one of the things I like about the way Spoon teaches it, because Spoon helped me get my cover call game straight. And I see a lot of people that don't teach this. And like now that I fully understand how to run the play, it's kind of confusing, right? When Spoon talks about only run cover calls on things that you want to hold long term. Because I see a lot of people out there going to buy specific things for cover calls just based on what they think the perceived premium is or how cheap they feel like they can get 100 shares.
Yes.
And like when you do the math and you like work that out, that never works out. But if it's something you want to hold long term, it kind of changes the whole dynamic of that strategy.
Yeah. So I always look at the cover call position, and the way I do it is that I want to own that company for years to come. Right. So I'm looking at the company from a price point aspect and more importantly, the fundamental aspect, because I'm not looking to hold it for 6 months to a year. You know, these are companies I really want to hold, you know, some of them 5 to 10 years out. So when I'm looking at that type of strategy, I actually want to own that company. So it's not just a trade for me, it's an investment. I will look at it as more of an investment side of things.
Got you. And Core, what's your other question you had, good brother?
Oh, I was saying, so how often do you, because I was running the strategy and I ended up losing my shares a gang of times because the market just kept taking off, right? Like the market just kept shooting off on me and I just kept losing my shares. I was making money in the process, but I just kept losing my shares to
Yeah.
to the market taking off. So what's your strategy not to lose your hard shares and lose that appreciation over time?
Well, the simplest way is just to buy back the call you sold, but you're going to take an L when you do it that way.
Definitely going to take an L.
The other strategy is, well, if you know technical analysis and you know technical score, you just sell your call contract when we go up on one of these runs. Like the market was up like 300 points today. I will probably step in and sell my calls today, you know, while we're up because I know we're going to have a pullback. You know, I sell them on the green days, and you know, I sell off my deltas. So I'm looking at delta when I'm selling my calls.
No, for sure. So I still, you know, again, the market we was on a historic run though, you know what I mean? So maybe I just got caught because we was in a historic run, but it was chaos.
Yeah, but the good thing is if the market went on a run, as long as you didn't buy the call contract you sold back, you made profit.
Oh, I didn't lose any money. Yeah, I just didn't make as much money as I possibly could because my shares kept getting sick. Like I was buying oil companies at $7, $10, $12, and them oil companies worth $100 now.
Yeah.
And you know, I end up losing those companies at $45, $50. So I made
a grip of money on the way up.
Yeah, but I didn't make the full.
You're looking at what you would have made if you would have just held the hard shares.
Just held the hard shares. I would end up, you know what I mean, making more money just holding the hard shares.
I mean,
because I had 300 and 400 of these, you know what I mean. I was buying them at $600 and $700 a pop.
Yeah.
So you know what I mean, like so, you know, for me, just you know, I just wanted to know how you was navigating that, you know.
Yeah, it's just a strategy behind it. Like I like to see these things run up. Like let's say if I see a 5% run up in the underlying stock, then
that's the day that you ready to.
Yeah, that's the day I'm gonna go ahead, sell my call way out of the money, and just go ahead from there. 9 times out of 10, I'm gonna collect that premium. I'm gonna be good.
Yeah. See, I didn't know nothing about rolling out the thing. I didn't know nothing about that at the time I was doing the strategy. You know, you put me on to rolling it out further and all of that stuff. But at the time, you know, I was a novice. I was just like, damn, I'm just going to take this money and run.
Yeah.
You know what I mean? But
all right,
it's like different strategies.
So let me ask you this question, right? If someone is coming to you today and they're like, Spoon, I want to get started investing, right? In this turbulent market and everything going on, what is your advice to someone who's starting right now today that's listening to this and was like, look, I haven't even got started. Some of the stuff over my head with the cover calls. I just want to get in the game. What advice do you give to that person?
I would tell them probably buy an ETF in a sector that you really like. You know, obviously tech has taken a beating, so I wouldn't step into a sector that's up like right now. Like I guess, like Corey said, like the oil stocks are up and everything. So I kind of wouldn't step in that space. I would step into the space that's on sale. So like tech and the financials are kind of on sale right now, and I would probably buy ETF and just dollar cost average into that ETF.
Got you. And what do you tell someone that's someone that's panicking right now, that's watching their retirement accounts go down, and they're like, Spoon, I'm about to get out the market altogether. I'm about to just run. I can't deal with this. What advice do you give to them?
I would double down. I actually upped my 403b. I upped it because it's accumulating. Like I'm getting more shares for less now than what I was getting last year or 2 years before, especially in retirement accounts, because you're not even looking to touch that money for years on coming. So, I will be looking to accumulate more right now. Now, unless you're about to retire, then I would tell you to pump the brakes because you're about to walk away. It sucks to if you retire this year and you took a 30% hit on your retirement account, that hurts.
Yeah. You might have to stay another year. Maybe stay there a couple of years.
Exactly.
Corey, that's how you know someone who's like bought in completely with the market. My man said, I'm upping everything. Yeah, I mean, everything going down this way.
I'm running the bag up.
yeah, man. Spoon, man. So listen, man, I'm thank you for coming on and having this conversation with us, man. Like, you're one of the minds that we respect when it comes to this market. We learn from you. We share information with each other. And I just wanted to have you come on and talk to our audience about how you see the market, because, the questions that we get on a day in and day out basis, you probably help answer some of those questions about strategies they can use, how they should be looking at the market, should they be doubling down. So just want to say thanks, man. We appreciate you for your time, good brother.
Thank you for having me again, Joe.
Absolutely. You'll be back on, soon when the market turn back around, man, and talk, some of these other strategies, some of the stuff you were telling me about before we came on, man. Like Spoon always got new game, man. So, he's always putting us down with different ways to like tackle these markets, man.
Yes. We're not going to talk about it.
Oh yeah, we're going to talk about that. We're going to talk about that up here though. Corey, you got any last words, good brother?
Nah, man, just he's been investing, he didn't see multiple market cycles, so listen to the man.
Absolutely. And for our audience out there, I'll make sure to put Spoon's social media contact in the description. He won't be on there like that anyway, but I'll put it up there nonetheless. Like my man Spoon is like a ghost, man. He just out here getting his bread and staying low, man. But it is what it is, man. So if you do want to see Spoon, though, come to the MDC, man. He's there every Sunday. So for those who don't know about the MDC, again, that's our private membership group. We have a class every Sunday where we talk about the markets. We actually show our positions of what we're going to invest in the upcoming week. Like we're very transparent to those in our private group. And again, anything we say on here is for educational, informational purposes only. This is not investment advice, but come join us on a Sunday as we talk about what we're doing in the upcoming market, and build with us, right? We have cover call classes. We have over 300 classes already recorded you have access to, plus our live classes, right? And Spoon, we got to get with you anyway on doing a part 2 of the cover call. I think you're going to do some spread or whatever it is, but we're going to, get with you on that as well. So to our audience out there, as we always say, it's not about how much money you make. It's about how much you keep. Game elevates. Listen, we'll see you guys in our next episode